Welcome, everybody, to the FinTech Forward podcast series. I'm your host, Stephen Moeller, founder and CEO of Fluxion AI Solutions, creating customized AI solutions for business. Fluxion AI, your trusted growth partner. Today, we have a very special guest joining us, Tom Goldblatt from Ravinia Capital. Tom founded Ravinia Capital and advises business owners on selling their companies through competitive processes that maximize value. He's a two-time distressed M&A Dealmaker of the Year and brings an operator and investment banker perspective to complex transactions. His firm, Ravinia, utilizes a unique process that identifies and engages a broad spectrum of potential buyers and lenders with the greatest synergies, efficiently qualifies and narrows the field of potential buyers, lenders, or bidders, and effectively promotes vigorous competition to consistently produce extraordinary results to his clients. Tom, thank you so much for being here today. Definitely looking forward to the conversation. So, in addition to the intro, if you would please, maybe just give us a little bit of information on your experience, what you've done in your career, and anything else you'd like to share.
Sure. Steve, thanks for having me. It's an honor to be here and speak to your growing audience. And I know people are looking to you guys to hear what's really currently going on, and so much is changing. So I built my career, started off, I studied accounting, which is the language of business. I highly recommend that to any younger people that are getting into business. You're really handicapping yourself if you don't understand accounting. I went to law school, which is helpful in negotiation, especially because we do a lot of distress stuff. It's good to know that. I got an MBA at Kellogg, which also is helpful, but all that stuff you can put aside because you learn much more through experience and just getting in there and seeing situations. So I started my career off, with those degrees and getting involved with accounting side and manufacturing side. And I asked business owners, what's most important, and you need to understand sales. So I was lucky enough to get learn sales early on and being in operations. But what I found I loved is deals, and that's how I gravitated to being an M&A investment banker. And really that experience, but even experience I had as a kid growing up, playing games, things like Monopoly, playing poker, all that kind of comes in because it all gets into that type of give and take in M&A and deal flow. So I've spent the last over 20 years running Ravinia Capital, which, as you mentioned, is a sell-side investment bank, and we really try to help benefit the situations we get involved by, particularly running a process, a competitive, to get the highest outcome. But we help our clients where they are. So a lot of times they're looking for capital, and in fact, honestly, Steve, probably 80% of the stuff we do isn't a fit for us, but we'll analyze it and then we refer it out to a lot of other partners that are in our network. A huge part of what we do is networking and having connections with other firms that makes us stronger, so we can bring in the right people, and that's how we get the so many deals that we work on.
That's great, and I was talking to a gentleman yesterday, and he mentioned exactly kind of what you were speaking to. It's the neighborhood concept. Well, I don't necessarily provide this service, but 3 doors down, my neighbor within my network, I'd be happy to refer you to, and that's really that's what we do in business. So thank you, Tom. If you would please talk to us a little bit about Ravinia, your service model, what you provide to your clients. Is there anything new and exciting you're currently working on, and anything you'd like to share about Ravinia?
Yeah. Well, we're a boutique, middle market, emerging middle market. We serve business owners, but we often come in. We're serving all the stakeholders in a deal. Our core offering is especially sell side M&A. We do some debt advisory, refinancing, sometimes capital solutions, what the client needs. Our product really is our process. It's how we run it. It's the positioning, the materials we create, which tends to be a SIM, confidential information memorandum. We do the outreach, the buyer research, management presentations, bids, negotiate and close. But it's interesting. Things are evolving fast because so much of that product stuff, is starting to get more automated and more efficient. We work with India a lot to help on that. But really the core thing that we do is not going to be replaced. It's the wisdom, it's the deal, it's the deal experience, and it's how to close a deal. One thing I talk about a lot is that every deal is going to have breaking points. Because you reach what you think is an agreement, and maybe it isn't an LOI, and everybody has terms, but time goes on and things change, and the leverage of a deal, and memories are short, and things happen, and bad things can happen, or good things, and it makes a deal out of alignment. And so as an investment banker, we really earn our money by bringing the parties back together. And so as much as things are changing in technology, I still find a lot of the old school stuff is so important. If something is going wrong, you better get on, if you can, get on a plane, get the parties together, and try to bring people back. So it's really exciting. I remember, first time, that he saw a fax come over from Hong Kong. I was like, oh my God, I can't believe it. And, and then, how email is, and then how you could, everything has changed so much for us. But things are changing more rapidly now than ever with AI coming on. And we can talk about that more later, but it's exciting, but it's also kind of dangerous too, because it's like it's so confident AI, and it so wants to give you an answer that you're going to like, but it can be just, the more you know, the more you see that it can be just totally wrong. And so I'm sure it's evolving, but right now it's really dangerous because it can save you a lot, but it's still not quite there. So it's kind of a very interesting time.
Yeah, I completely agree, and we'll explore that later. So what I'm hearing, Tom, is say Steve, business owner, says, I want to sell my business, but I want to maximize my profit, and I don't really know how to go find a buyer. So I come to Tom at Ravinia and say, Tom, can you act as my agent? And can you search? Because I want you to maximize my results. Is that kind of the value prop there?
That is pretty much, I think a lot of people underestimate, and we see this all the time, that people want to sell a company, and it's not like selling a house. Every single company is unique. And so more often than not, you go and an owner says, oh, I pretty much know who's going to buy my company. Or they get like a valuation which says, oh, like the average company in my market is selling for X amount, 5 times EBITDA, 10 times EBITDA, and they say, I don't really need a process, and they're worried about, it's just a scary thing going through an M&A process, and what really is the truth is that this is a one-time thing, and everybody values companies differently, and they value the buyers for their own. So we really believe in really having a competitive, very well controlled process that puts, that really makes the buyers have to compete, for the company. And it ends up too that like it's almost always wrong that you think, oh, it's this guy's going to buy my company. There's all sorts of weird buyers, and everybody has their own interests. You've got a company, let's say, Steve, you're selling your company, and there's one guy that just wants it because he thinks that like you're an additional market for him and he can add that on, and there's another that just likes your intellectual property and thinks they can do something with it, and then there's another that just is like it just has a lot of money and just as a hobby wants to buy it, so, and all of them really, what price does a company get set at? Well, the price is not at some kind of average. It's basically the tail buyers we're trying to have, the people at the edge, and it's at the second highest tail buyer, because you can't really bluff people. but they're going to basically figure out what you're willing to take. And so you've got to have alternatives, and you got to have, it takes a lot to get to the very end of an M&A deal, because by the time you're done, everything comes out. And everybody knows that. And it's like you have to have real commitment. There's real money starts to get spent on lawyers and everything by the end. So to close an M&A deal, you got to have people that really want to do it. And you got to kind of be, flexible and willing to kind of maneuver to get to the very end. What we try to do is we try to eliminate friction. So we try to have buyers come in, and that's what we do with our materials. We try to have everything up front so people can quickly evaluate it, because you want to expose everything as you can, to your buyers up front. If you hold things back and then they find them later, they're going to do what's called in the industry trading down. And they're going to take advantage of that or break the deal. And so you really want to make sure people, when they make their offers, are competing, and you want everything so for instance, you own real estate, let's say. To sell real estate, you've got to have an appraisal, but you also have a phase one environmental, because people are not going to buy it without knowing that. That takes weeks to do. So you don't want to wait to the end and then something shows up. One change in M&A that's really occurred over the years is it used to be rare to do what's called a sell-side quality of earnings due diligence. Now, buyers, they started hiring these outside accounting firms, so every buyer is going to do a sell-side, a buy-side diligence, and they're going to look at everything before they close, and the job of these accountants is to find stuff. So now you've got to be proactive and have a sell-side diligence done up front, so you expose everything and you're protected that way. That costs money and it's commitment. But again, if you want to close an M&A deal, you got to do all these things up front, and you have to have competition, or you're going to end up with a broken deal, or doing a deal because now you're pregnant along the way and you want to close. But these are a lot of the things that I would say anybody selling a company, do not do it without having an investment banker, business broker that's working alongside you. It's complicated, and you're not going to get the best price.
I completely agree, Tom. Lots to consider there, and the value of having an investment banker such as yourself would be tremendous. So thank you for that. Let's kind of shift into what we were talking to earlier and go towards technology. So you've obviously been in the business a couple years, so tell us about, everybody's digitally native nowadays, but kind of talk to us about how technology has evolved over the years and kind of how you leverage it now in your business.
Yeah, it's really exciting. Technology is just making our work easier, more efficient, more effective. One thing that we just implemented is a new CRM system that we did a study. Actually, we worked with the class at University of Illinois, a project called, study the different possibilities. Deal Cloud, Salesforce, HubSpot. We ended up choosing Made Market, and so that's where so that's really keeping track of every communication that we have related to a deal. It's automatic. It's designed for investment bankers, so it's automatically making reports. We're using a variety of AI type of and we kind of instead of everybody being on ChatGPT, we're trying to have Gemini. We're trying to have Anthropic, so we can kind of come at it at different levels. So the technology, as far as research for buyers, is done. There's various platforms. We use PitchBook is the industry leader. It's the best for private equity. CapIQ is an industry giant. They're the best for kind of they're Dun and Bradstreet's part of that. They're the best for strategics or companies and stuff. We're finding there's new AI ones coming on that we're experimenting with. So we're always looking, because our thing is to make sure that nobody says that we went to every buyer, because if we don't bring a certain buyer in, they're not in the process. Sometimes that's the difference between actually liquidating or going on. And we also do a lot of bankruptcy sales, and so in those we're going to have to testify. So we want to be able to sit there and tell a judge, we explored everybody. So we use technology for that. We use technology in every aspect of the thing. We use data rooms. So the advancement in data rooms is amazing in investment banking. So it used to be, I hate to say it, when I started, it was actually physical data rooms. And that was a huge part of the job for lawyers and everything like that. It's you go in and actually visit and now obviously everything's is physical, is virtual, and it's great because you can track every movement of the buyers in the data room, and we use that a lot. I'm a data room obsessive. Because a lot of times a buyer will say, "Oh, I'm not interested anymore," and then you see they spent the whole weekend. Or conversely, a lot of times you can see, and what I've found, one thing about M&A is that if somebody's going to buy a company, they have to want to buy it. They have to be committed. So we get a lot of private equity firms in, sign an NDA. They come into our process and they sit there like a turtle. They don't do anything. The IOI deadline comes up, and then they lob an IOI in there. And if we see they haven't done any work, it's very unlikely that they're going to ever close. They're just like seeing if they can buy that deal. So data rooms, we use a data room called Smart Room, but there's a lot of good ones like Ansarada, Intralinks, and they're just getting better and better. I was just at a presentation done by Stretto, which is integrating AI into their whole platform, and it's really interesting because there's starting to be a converging of like, okay, what does the lawyer do? What does the data room do? What does the investment banker do? So we tend to answer the buyer questions. Who puts the diligence together? And it's starting to be now where like things are starting to merge together. So I don't know where this kind of ends up, but things are changing. The ground floor is changing. I think that the business model, I think ours is going to stand. We're on a success fee basis. So basically you hire us as an investment banker. We're going to get kind of a exclusive arrangement, and we're going to have a retainer. And we're not billing by the hour typically. We're going to have a monthly fee that can go against the success fee, and then we get a percentage of what we do. Other people, consultants and lawyers, they bill by the hour. So this is kind of getting into opinion here, but like I see that changing quickly because because it used to take hours and hours, days and days to do the discovery work, to do the drafting of documents. Now it's like quick. Is it perfect? No. But does it take a lot less time? Yes. So it's interesting. So technology is really changing things, but in a way and look at like what we're doing now on video. So one thing that changed rapidly during the pandemic, is virtual meetings. So that's changed. So we still now, it used to be you do an M&A deal and you're going to have like 5 management meetings where they come and visit. Now a lot of that is done virtually. You still, though, nobody should buy a company, though, without actually visiting it. But I'm finding these virtual meetings just great because one of the big things we have to do is like go over documents, long documents, asset purchase agreements and stuff. You have lots of lawyers on the phone. And this really actually is probably better than in the old days when you had, everybody kind of having to get together. Now you can really focus. Everybody's in the room. So it's just wonderful. But the basics in a way haven't changed, so it's still like kind of having the deal smarts and it's how you run that process and how you keep people in the process, getting over breaking points and getting to close.
I completely agree, Tom. So, you're very much a trust-based service as a wealth managers, attorneys, etc. At the end of the day, you still need the human interaction. You still need to be the trust and deliver. However, technology and the hot topic AI is definitely a tool that can save you time and a lot of efficiencies. like you mentioned earlier, AI, I had someone describe it to me. AI is like a knife. It could be used to harm, or it could be used to slice meat and vegetables and prepare a delicious 5-course meal for someone. So the challenge for companies such as mine that provide AI tools is to kind of squash those misconceptions, present AI as a trusted, as a valid tool to use in their business, so that because that's the biggest thing, is just earning trust in what AI does. And, I think in all industries, and even yours, you see whether you're buy side or sell side, everyone's digitally native. They're going to be doing a ton of online research. Information that's available to them today is just light years ahead of what it was. So obviously confidentiality and privacy is a big thing in your industry. But again, we have much informed buyers and sellers. However, they still need that specialized expertise that your firm offers. So talk to us, kind of, Tom, about it. Are there any, kind of state of your business today? Are there any stated goals, like 1, 2, 3 years to grow? Is there any type of succession going on? Or kind of what's going on at Ravinia?
Yeah. Well, Steve, I think our goal is to continue to get better at what we're doing, and be open to change. I feel like as a boutique investment bank, it's really an advantage because we can kind of we can gravitate to what's the best, and we can adopt that. So I'm really committed to being open to that. Our goal really isn't changing as much, though, is to kind of just continue to get exciting, really important deals. We're working on a deal we just picked up for a lingerie company that came to us just 2 weeks ago, and they need us to get it on in just a couple weeks, or to continue, and so it's exciting. I like working with really good people. I think we've learned that's important. So our goal is to kind of get better and better, work on better deals, and continue to win results and awards for what we're doing. It's nice that I've been able to make my life and my career integrated in a way, because we spend you spend a lot of time, we're talking all about the deals, and that's a lot of the fun, and we but we spend a lot of time networking and making relationships and making people trust you, and helping them so that they want to help you, and at industry conferences, and and a lot of that can be a lot of fun. So people really in networking, they want to basically gravitate to people they like. They want to do things they like. So we want to kind of continue that, and continue to be better. I think our goal isn't to be the biggest, and I'm not looking to manage more and more and more and more people, but our goal is to be the best, and to work on interesting deals, and that's kind of where we're at. We're probably changing now more than ever, because we're really open to adapting to all these new technologies. But you're really only as good as your last deal, and that's one thing too. I like to be in position. We want to be more selective on our deals too. So you really kind of say to yourself, this person's difficult, or and I'll get past that. But the fact is that difficult people are going to remain difficult. One thing I'm proud of is that I've grown through my career in my emotional intelligence and how I deal with things. So when I was in my 30s and stuff, I really had to be, if somebody came at me in a negotiation or something like that, I just would have to put them down. I would have to show who's the the alpha male in the room, and now I have a very different approach, and so it's like, okay, that's fine, okay, but and then move forward. And I've also learned a lot. I used to have a meeting, and then afterwards I'd say, okay, here's what I thought. What do you guys think? And now I do the opposite, because it's like I know what I think, so I'm like, well, okay, I just keep my opinion myself. What do you think? What do you, around even to the youngest person in the room, and you learn much more. They learn much more that way, and you don't bias. So, so kind of learning all that emotional intelligence, it really helps you a lot in investment banking. You can't be attached, because things just change dramatically, and you have to kind of adapt to where the ball's going and where it's what's happened.
Yeah, I completely agree, Tom. Thank you so much for that. So just I guess a final question, if you will, Tom. So tell us a little bit about what's day-to-day look like for Tom as the founder of Ravinia.
Yeah. I think that's an interesting question, and I'm glad to think about it, because I think that I've learned over time that habits are so important, and it's really important what you do each day, because that sets you upon that day. And so I start the day. Typical work day is I get up and I try to go to the gym first thing, and it's like that has to be a priority, and you have to do it. Or for me, if I don't do it, then it gets out of the thing, and that has to, as busy as you are, it doesn't matter. You still got to kind of do that. And so then it's basically the day then is sit down after that and try to think about the key things that have to get done, and to-dos and stuff. And then I live by my calendar, so the calendar has to be right. One technology I didn't mention is the Calendly link. It's just amazing for setting up, and you got to make sure that that's all right. But then my morning then is generally going to be video meetings. A lot of check-in meetings. So each project, I try to have at least one regular meeting each week. So we kind of assemble about that. So a lot of internal, external. So it's video meetings, prospecting, working on deals. And then I try to have lunch is the most important hour to network. And it's very important that you can pretty much, everybody's open for lunch. So months ahead, I try to line up my lunch calendar, and then make sure that I'm dining, pretty much just about every day. Then I go back, and then it's the afternoon. Try to be working on the tougher, eat those frogs, those tough things to do. Make sure that you're not forgetting your overall longer term goals. But it's video meetings, and then in the evening, it's normally going to some type of networking. Tonight I'm going to drive to Milwaukee to go to Turnaround Management Association meeting. Last night I was at the Anti-Defamation League. I'm on the board of directors there. So it's generally doing something social that I enjoy doing, but also is enhancing those relationships. So that kind of tends to be a typical day for me. It tends to be exhausting, so I tend to try to take Saturday off. It's not, I'm religious, but it's just try to have that day where I'm just not doing businessy stuff. And then Sunday, it's going to go to the gym. It's kind of catching up and, doing work, watching football, but, getting ahead, getting prepared. So you go into that week now on top of it. And that's kind of my typical week.
Very good, Tom. Very good. Obviously a recipe for success for you. So, Tom, before we close here, any final thoughts for the viewers?
It's a good question. I guess it's that don't compromise. Don't if you're not loving what you're doing, adapt. Just continue to really push yourself towards what evaluate as you get into it. Your failures are what you can learn from. And just keep, don't give up. Continue to want to, do what you can do, and nobody's going to get in your way if you're really determined enough to do something. So That would be I think most people can do a lot more, and the person holding themselves back is generally themselves.
That's a very inspiring message, Tom. Thank you for sharing that. And that's a great way to close. So, Tom, again, thank you so much for joining us today. It's been a pleasure speaking with you. We appreciate your expertise and telling us all about the story at Ravinia Capital.
This has been a lot of fun. Thank you, Steve, and good luck to you.
Absolutely. Thank you. Hope you enjoyed watching, folks. Join us back here next time. FinTech Forward podcast series, Fluxion AI Solutions, and Ravinia Capital. Check us out online. Subscribe to our YouTube channel. Thank you very much. Have a great day. Be well.